Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, February 17th, 2022. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, the previous session's close price right here has been heavily offered today in overnight and pre-market trading. 3 times rejected and just now turning down sharply off that zone. That's 44.65 here, and we're already trading now back into the 44.32s. Again, approaching the previous session's low now. Geopolitical tensions here continuing to be a headline risk for the market. And after a significant decline in January here, much of the bounce occurred also in January, and since then you've seen price basically just hug the flat line, either a little bit above it or now a little bit below it. We could be looking at further chop back and forth as the market navigates the headline risk from Russia-Ukraine. So again, right now, showing signs of weakness here. We could continue to chop back and forth here a bit, but if there's a failure, to really hold the 43.50 zone, I mean that's where things really start to open it to the downside. We could easily drop a little bit and bounce back up and still kind of be in this range. It's kind of been that way, but really things get very, very bearish through 43.85 and through 43.50 as that opens up new lows up ahead, which still could be in play given the headline risk we continue to see. Now, if bulls are able to defend this area, as yesterday was the plan heading into yesterday's trading there, can we hold this zone? The previous session's low could be an opportunity here for a bounce back up within the range, but you're staying kind of within yesterday's range at that point. So the previous session's low is going to be very, very important here very shortly. Taking a look at the NQ. If you look at the 60-minute time frames right now, we've got quite a bit of compression. The NQ is really the only one here that's hit the midpoint from the previous week's range. The ES has not hit it, and they're both just kind of compressing right below it. So there is the potential here to open up above the previous week's midpoint and really get things going to the upside. The potential is there. However, again, as the market continues to see headline risk here, negative headline risk, we're seeing more compression with a downward potential bias here. So the previous week's close is going to be very important. Any failure to hold above the previous week's close in either the ES or NQ could open up new lows up ahead. So that's going to be the key level to continue to watch here early on. Similarly to the ES, the previous high here at 14.4 plus the breakout point and yesterday's low being 14.4, that's going to be the key level again today to watch intraday. So as we continue to see some weakness, watch the previous session's low for potential rejection, as that could lead to a move back up within the range. Again, if it can get above the previous week's midpoint, that opens up the upside, but right now been mostly downward sloping here with the negative headline risk overhead. If we take a look at crude oil, roll over here on the futures, it appears, and we also see that price has rotated down off of this high here, the 95s. If you look at an intraday time frame from yesterday afternoon, the rotation down off 95 was swift. It was a sharp, impulsive sell-off, and price dropped down all the way to about 90. So it was a 5-handle drop with no real bounce. We've gotten, again, the rollover here where we've gotten as low as about 89s here and now bouncing a little bit. But that impulse sell-off right there is significant and may mark a near-term top. 96 was our target initially. On this day, we called 96 as the target based on the impulsive move, and it got nearly there, 95.82, and this is the 96.03, so about 21 ticks off from that target. Not bad as a target we called from last just December, basically. But now we're coming into the point of this trend that looks very similar to here, where we had a significant reaction here, just like that, and we've continued higher, and now we've come into a phase where we may see this occur. So this big pullback here has probably marked the high. While we may bounce because the trend has been bullish, we may not see new highs beyond that. We may see some development here at these highs before the next move occurs. Additionally, we have 10-point market distributions here to continue to watch. The 96 down to 86, that's a market distribution. So we could drop theoretically all the way to 86 and still kind of trade in that 10-point zone. Then you have 76 to 86 as the next market distribution here. And below that, again, down to 66 is the low, into 76. That's your third distribution. So once we traded out of this one, we went clean through one, clean through another. When you go through two clean distributions, as we did here, there's a tendency to slow down and basically digest that recent price action. So expecting some range-bound action between 86 and 96. A failure to hold 86 could bring us back between 76 and 86. All right, let's take a look here at Bitcoin. Bitcoin's down 4% right now. Pretty big rotation lower. If you look at the intraday time frame, like a 60 or 15-minute time frame, there's a bit of a rounded top that has developed over the last 3 days. We talked about this point right here. That breakout was significant and how we needed to see a price hold or retest. Got a little higher here and started to go, and now we're starting to see that failure. Again, geopolitical headline risk here coming into play, Fed coming into play, and different things, inflation fears. So we're seeing a little bit of weakness here where this thing could pull back. Again, the zone between 37,500 and 40K. I know it's a wide zone, but that zone right there could still be in play for bulls to defend as this thing trades between 46 and 37.5. Now a failure to hold 37.5, that will open up new lows ahead. And from a longer term perspective, weekly chart perspective here, there is still the potential here to make its way all the way into the previous year's low and that 25,000 LVN. 25,000 will be a heavy in. If we see that level, that could be the significant price to bring it back toward value for a double, and then across the range toward new highs at 75. So again, nothing says we can't get down there at the moment. Got to continue to watch the market structure here. And 40,000 going to be a big test here for this one as it comes into play. If it can hold, we can bounce, and 52 would be the next upside target, but this is the level to hold. If we take a look at Ether futures here, down 4.65%. Very similar market structure as well. You can see right here that 2,800, 2,750 level is very similar to the Bitcoin 40,000 level. And that's the zone to continue to hold. Even if we drop down into the previous month's close, bulls want to keep it bid for a shot at pushing this thing back toward 36. So holding 2,700 to 3,700 could be in play. Now, like Bitcoin, though, if we fail here, there's the potential to open up new lows toward that 1,700 zone. Now, again, if we go open this thing out to the weekly time frame, you're going to see the previous year's lows here, previous major lows just above it, and and again, nothing says we can't make a move all the way down there. Right now, one thing at a time, and it's the market structure level at 2,800. Can it continue to hold that zone on a pullback for a bounce higher? Again, about a plus 1,000, or do we fail at that point and see new lows ahead? That's going to be the key level to continue to watch. All right, that is it for now. We'll see how this plays out heading into the new day of trading. Good luck, trade well, and I'll see you in the trading room. Take care.